Well, it's April 2022, spring has sprung, and in a normal market we'd expect to see the market start to pick up for the summer selling season. So let's check in and see what's happening with the housing market both nationally and locally here in Spokane. My name is Phil Wells, I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video we're going to look at national pending home sales, we'll look at mortgage rates as well as mortgage application rates. We'll then take a look at the Spokane market itself. We'll then move on to look at some news articles that have stood out to me, and at the end we'll try piece all of it together and see what it means for you. So let's get into it. Looking first at national pending home sales. Just to note, the figures that I use throughout these videos are the latest figures that are available, but there is often a lag when it comes to reporting this information. So for example, the figures we're about to look at detail pending home sales from February. We obviously look at pending home sales rather than actual sales because it takes a while to actually close a transaction. So closed sales in February would represent activity back from December or January time, whereas pending home sales for February give us the most up-to-date impression of what the market's doing. Contract signings declined 4.1% month over month in February 2022. Year-over-year contract signings declined 5.4%, which represents 9 consecutive months of year-over-year sales declines. Where I am in the western region, sales declined 5.4% in February, and they declined 5.3% from the prior year. So more compression in an already heavily squeezed housing market there. We have no inventory. I ran a search the other morning for single-family homes in Spokane County. Yes, the entire county, and there were only 280 single-family homes for sale. I continue to believe this decline in sales is because you can't sell what you don't have, and inventory is tighter than it's ever been. Here's what the National Association of Realtors chief economist had to say. Pending transactions diminished in February mainly due to the low number of homes for sale. Buyer demand is still intense, but it's as simple as one cannot buy what is not for sale. Along with climbing home prices, this economist added that now buyers must grapple with rising mortgage rates and noted that shoppers will likely want to lock in rates before further increases. It is still an extremely competitive market, but fast changing conditions regarding affordability are ahead. Consequently, home sellers cannot simply bump up prices in the upcoming months, but need to assess the changing market conditions to attract buyers. As of February 2022, higher mortgage rates and sustained price appreciation has led to a year-over-year increase of 28% in mortgage payments. The surge in home prices combined with the rising mortgage rates can easily translate to another $200 to $300 in mortgage payments per month, which is a major strain for families already on tight budgets. He mentions that home prices themselves are still on solid ground. They may rise around 5% by year's end, and we should see softer gains in the second half of the year. So, some signs there that increasing interest rates are starting to cause some resistance in the rapid price appreciation that we've been seeing. But also we have an indication there that the appreciation that homeowners have gained recently isn't going anywhere, but it will start to settle down to a more reasonable 5% a year. If you're a seller right now that doesn't need to buy on the other side of a transaction, maybe you own a second home, you inherited a home, or you have a rental property that you want to get rid of, you should seriously consider selling it. You're almost certain to get way more than you asked for it. And even if you do have to buy on the other side of a transaction, likelihood is your sale will free up a large amount of cash to allow you to compete on that future purchase. And if you do decide to list your Spokane home for sale, please consider me as your listing agent. I can be very competitive in terms of commission rates. I firmly believe that in this market you don't need to be paying premium commission rates for someone to sell your home, which is likely to sell like hotcakes. Let's move on to look at mortgage rates. Obviously, most people buying real estate are buying it with a mortgage. So to keep an eye on mortgage rates gives us a really good idea of what buyer demand is likely to do. Rates are also up. We all know that they're attracting a ton of attention in the media, so it's important to check in and see what's actually going on when it comes to interest rates. Sticking with February for a second, mortgage rates at the start of February were at 3.66%, and by the end of February, they were at 4.18%. The most recent rates that I could see have risen sharply to 5.02%. The highest rates that I've ever seen in the time that I've been working in real estate. This shatters expectations from leading economists in a survey conducted by the National Association of Realtors at the start of the year, which predicted that rates will increase steadily throughout the year and end 2022 with rates around 3.6%. The Federal Reserve has increased interest rates 0.25% recently, but that does not explain the nearly 2% rise in interest rates we've seen in the last few months. The market must be sensing some inherent risk in the US and global economy, and I'll touch on this more when we cover news articles. All I know for sure is that rising interest rates only serve to push aside those first-time buyers that are only just qualified to buy homes. I have personally experienced this with some of my clients who have checked out of the market recently. So rates are up, that's undeniable. At this point though, it's important to take stock and remember that buying a home is still a good idea and you're not stuck with your interest rate. Eventually rates will come back down and you can refinance at that stage. And of course, you might face some slightly reduced competition if you're prepared to stick it out and compete in this market. And I'm practicing what I preach. I'm not just saying it because every real estate agent always says it's a great time to buy. Since we last spoke, I've been fortunate enough to get a property under contract at a much higher interest rate than I would have liked. So I did what I said I would do. I understood that it would take me a few times to get there, and it did. I lowered my expectations. I actually took on a project home that needs some cosmetic renovations. And I accepted the fact that my interest rate would be higher, but I understand that I'll probably be able to refinance in the future and it will work out in the long run. I will be posting some rehab videos for that property if you're interested on a second channel of mine. I'll come back and I'll post a link to this in the top right of this video when that channel's up and running. Sticking with mortgages and looking at mortgage application rates. After all, it doesn't matter if rates are at 2% or 5% if nobody's actually applying for a loan. So let's head over to the Mortgage Bankers Association, the MBA, and see what the experts have to say. Just a note, the MBA publishes these figures weekly, so we're able to get a really good up-to-date impression of what mortgage applications are looking like. So the headline is a pretty downbeat message, but as I always say, headlines don't tell the full story. Refinance rates are obviously down. This should be obvious. Who in their right mind would refinance at a 5% rate? But in terms of purchase applications, which I really care about, even with the ongoing climb in rates, purchase application volumes were little changed last week. This is particularly auspicious as we are now in the beginning of the spring home buying season, and those shopping for homes are struggling with not only higher and more volatile mortgage rates, but also an ongoing shortage of homes on the market. Given these hurdles, it appears to be promising news that purchase application volume has not declined, as many potential buyers are likely feeling the squeeze in their purchasing power from the jump in rates. So despite increased mortgage rates, mortgage applications for purchases are holding steady, which is a really good sign for strong and continued buyer demand. Ultimately, people still need housing and they're prepared to pay for it. The people that are losing out, of course, are the people that are only just qualified to buy homes that are being pushed out of the market every day. A friend of mine just listed a property for sale below the median here in Spokane and received 21 offers. That's a lot of disappointed people, and it shows how difficult it is at the lower end of the market. So to sum up, I remain confident that increasing interest rates will not dampen the market significantly, but will instead cause appreciation to settle down at closer to historic levels of around 2 to 3% a year. Having said that though, I don't think consumers can tolerate higher interest rates than we have right now. Eventually, the ratio of incomes to monthly housing payments is going to make it difficult to justify buying a home at all. And if this does happen, we'll enter a stagflation type environment where property values are inflated, but buyer demand drops off significantly. I hope that doesn't happen, that doesn't benefit anybody. If you're a buyer right now, you will have to be more aggressive than previous generations have had to be in order to buy a home. You'll need to have more cash on hand than just your down payment in order to actually buy a home. But you can still get on the housing ladder, you can still move up the housing ladder, and owning a home is still a great wealth building tool. Looking now at my local market, Spokane. If you're a homeowner right now and you've owned for, let's say, more than a year, likelihood is you have a strong equity position given how much prices have increased here in Spokane recently. You're in a market craving inventory and you have a great window of opportunity to sell your home while interest rates are still affordable to buyers. And as I mentioned previously, I would love to list your home for sale in a way that keeps more of that equity in your pocket. If you're a buyer right now, you're facing an uphill battle, I'm just being honest. I myself had to make several offers this month in order to get a property under contract, and like I said, that property ended up being a fixer-upper that's going to require a few years of work. But if you are someone wanting to buy here in Spokane, please still reach out, it's still possible, there are people still buying homes here. And I'd be happy to tell you whether you're likely to be competitive in this market and the best strategy for you to pursue. Now I wanted to move on and look at a few news articles that have stood out to me this month. If you're new to this channel, I like to cover news articles because numbers, frankly, don't tell the whole story. We need context. I try to punctuate the numbers with my own experiences and opinion, but news articles add extra context and sometimes they touch on issues that I don't always cover. The first piece of news is an annual shareholder letter written by JP Morgan CEO Jamie Dimon. Here's what he had to say about his outlook for the US economy. America and the rest of the world are facing a confluence of three important and conflicting forces: a strong US economy, high inflation, and the war in Ukraine. They present completely different circumstances than we've experienced in the past, and their confluence may dramatically increase the risks ahead. While it is possible and hopeful that all these events will have peaceful resolutions, we should prepare for potential negative outcomes. So a watch and see outlook on the US economy there, and he encourages people to prepare for the worst while hoping for the best. Now, there's been a ton of news articles published this month about a potential crash in the housing market. If you remember, they were publishing this theory in July, August, September time last year, and well, it's been 6 months, so why not try and push that theory again? So in response, I wanted to recycle an article from last month that points out a few fundamentals that show that the housing market is not in crisis. In my opinion, if there's going to be a crash, it's going to be a US economy-wide crash. The housing market isn't uniquely susceptible like it was in 2008. According to this article, homes are actually more affordable as a percentage of income than they were in 2008. I know that might be difficult to believe given how much appreciation has gone up, but it looks like incomes have gone up as well. Mortgage standards are much higher than they were, meaning that there's less chance of default. Foreclosures are much lower than they were in 2008. Supply is significantly below the levels of 2008, meaning demand is strong enough to sustain the market as we see it today. In these circumstances, unless rates increase to such a level that buyer demand completely dries up, I don't see a crash uniquely occurring in the housing market anytime soon. The carpet will have to be pulled out from under the housing market by the entire US economy collapsing in order for the housing market to go down. Stagflation is of course possible if demand wanes, but right now I don't see any evidence that that's going to happen just yet. Now I wanted to cover a few articles quickly and pick out some pertinent points. In this article, according to this graph, the qualifying income for median-priced homes is still below median incomes, which emphasizes what I just mentioned in the previous article. Now, in a previous video, I had discussed the opposite being true, but it's worth noting that that was for the 18 to 44 demographic, not median incomes across all ranges. This next article highlights the fact that home ownership still continues to have many benefits. Owning a home continues to be a proven method for building long-term wealth. Home values generally grow over time, so homeowners begin their wealth building process as soon as they make a down payment and move to pay down their mortgage. In this last article, the president of BlackRock has taken a break from buying up single-family starter homes and creating a generation of renters to call out an entitled generation who will have to prepare for shortages as inflation soars. I want to be clear, I firmly believe in capitalism, but I want to keep highlighting the fact that companies like BlackRock are buying up single-family homes and creating a generation of renters, and I think this practice needs some oversight from Congress. Now let's try piece all this information together and summarize the market as we see it right now in April 2022. The big news is that interest rates have shattered expectations by rising rapidly. But interestingly, this hasn't yet dampened buyer demand as mortgage application rates remain steady. But I wonder how much more buyers can take before we enter a sort of stagflation type environment. We continue to see compression in the housing market as sales are down both nationally on a year-over-year and month-over-month basis. Despite this though, we have such low inventory that prices are continuing to rise. It's a seller's market in the purest sense of the term. It's extremely competitive and it's frankly unpleasant for a lot of buyers out there right now. People who 5 years ago would have been considered extremely well qualified are now struggling to connect with homes, and the people that are only just qualified to buy homes are being squeezed out the market every day. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. If you are looking at listing your Spokane home for sale, then please remember I can be extremely competitive in terms of commission rates, and I would love to list your home for sale. If you're looking at buying a home here in Spokane, please still reach out to me, give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Like I said, my name is Phil Wells, and thank you for watching.